Welcome to another episode of the upcoming #1 semiconductor investing podcast in the world. Today we have a great episode for you. We have 4 amazing topics. First, we're going to take a closer look at Qualcomm. Next, we're going to take a closer look at SLAB, an Internet of Things company that many might not be familiar with. Third, we're going to take a closer look at United States regulations and China and what it means to semiconductor investors. Finally, we're going to take a closer look at GlobalFoundries. The company just recently reported earnings, and there's a lot to unpack there. I keep saying we, and today I'm joined again by Nick Rossolillo. He was a host for us on the first episode. The first episode did amazing. We want to thank you guys for watching and for enjoying. And Nick is also starting a new YouTube channel where he discusses the semiconductor market. So feel free, everybody, if you're watching this video, make sure to show some love to his channel. The link will be on the description. It would also be on the pinned comment. Nick, on the last episode, we did get a comment about discussing more of Internet of Things companies. I think we mentioned Qualcomm a little bit and how it has a growing market there. So that's kind of the main reason we started today's episode with Internet of Things. So first, we're going to start off with Qualcomm. You're going to talk to us about SLAB. Before we get into the topic, can you just give me a little explanation of what that company does?
Yeah, so SLAB or Silicon Labs, really interesting company. They do wireless connectivity for Internet of Things devices. So we probably all have some devices in our homes or in our workplace with SLAB chips in them. So like Wi-Fi and Bluetooth chips that basically connect everyday items to a network.
Definitely. And we keep mentioning Internet of Things, Nick, and one of the first things I want to do is kind of explain what that is. And instead of kind of creating our own presentation, I found online that Oracle does a really great job at explaining what Internet of Things is. So let me share my screen real quick. So if you go to Google and just put Internet of Things, Oracle will be one of the first places that pops up. So here we can see, what is IoT? So IoT is Internet of Things, and it describes the network of physical objects, usually things, that are embedded with sensors, softwares, and other technologies for the purpose of connecting and exchanging data with other devices and systems over the internet. A great example could be like those smart thermostats right now. So why is Internet of Things so important? First, it connects everyday objects, like I pretty much mentioned, kitchen appliances, cars, thermostats, baby monitors, to have internet via embedded devices. By means of low computing, the cloud, big data analytics, and mobile technologies, physical things can share and collect data with minimal human intervention. And the great things, yes, I think last week we talked a little bit about data centers and kind of the clouding market. And we mentioned that some of those technologies are what's fueling Internet of Things. And it is true here. What technologies have made IoT possible? First, the low cost of low power sensors technologies. A nice kind of thermostat chip can be bought for less than $2. During my engineering class, we used to work with a lot of sensors, and it's crazy how cheap some of these sensors are, Nick. The other thing is connectivity. It's getting cheaper to be able to connect to the internet. The cloud computing platforms, now you don't need to store data within the device, so it kind of saves on memory. A lot of that data could just be offset in some supercomputer far, far away. Machine learning and analytics is also great. We know we have those thermostats where you might just set it, hey, to have a constant room temperature. So it's using some form of machine learning analytics to what the user prefers to make sure that temperature is always comfortable for the user. Finally, you have conversational artificial intelligence. You have your Alexa, you have your Google, I forget what Google's platform is called. You have Siri as well. So conversational AI is another great move for Internet of Things. Finally, Nick, they do have the industrial Internet of Things. So normally when we think of IoTs, we think about it in the consumer space, but it's also in the industrial market for things like smart cities, smart digital supply chains, smart power grids, smart manufacturing. So anything smart that's kind of collecting some form of information, sending it over the internet, and kind of collecting data to overall improve whatever solution they are doing is most likely an IoT product. So anything you want to add here, Nick, about IoTs in general, or just where some cool products that maybe you might know within this space?
Yeah, I mean, at one point, I think I had like, I don't know, half a dozen Google Home devices. And so, you know, that's something. I've been a big consumer of IoT. But I think the bigger, more transformational part is that industrial segment that you just showed there, Jose. I think there's going to be like some actual real world impact in industrial IoT. And I'll share a couple of those that SLAB is working on when we get to that part of this episode. But some really cool stuff happening, and I think it's kind of converging with like the electric vehicle movement and renewable energy. It all starts with semiconductors, right? Which is why I think we both love this topic so much. Like, it all starts right here. So this is cool stuff.
Definitely, Nick. And so just to jump right into our first topic, now that we understand what Internet of Things are, is going to be Qualcomm, ticker QCOM. Many might know Qualcomm as the creator of the Snapdragon, the processor that goes in a lot of Samsung phones, but they do create a lot of Internet of Things solutions.
I do want to thank the Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
So first, unfortunately, just like the semiconductor market, Qualcomm has definitely taken quite a hit. Year to date, the stock is down roughly 40%. In the past year, it's down roughly 32%. We can see the company did report earnings less than a week ago, and there was a massive dive. We're going to explain what's happening there, but we can see how the market kind of, it's such a volatile time where even though it dropped roughly 11% in the past month alone, Nick, the stock is only down 1.8%. We just see these crazy moves in the market right now. Some of the solutions that Qualcomm has for the Internet of Things, they do have GPUs, they have CPUs for processing, they have kind of camera solutions, connectivity solutions. And we know cameras can be some form of sensor, visual sensors. Processor can help with kind of management some of the data. And then the kind of connectivity can help kind of send that data to some other solution. Remember, with Internet of Things, it's not the data, it's not the product itself doing much of the analytics or the solutions. It's more just collecting it, sending it somewhere else, and then it has to kind of receive some form of information that, hey, now with this data, I know I need to do this object, or I need to kind of do this task instead. And Qualcomm, they hit their Internet of Things in numerous markets. They hit the consumer market with kind of your tablets. They're also hitting kind of the virtual reality, augmented reality product, wearables, right? We have all these smart watches, we have these smart headphones that kind of understand how our heart rate monitor, how our health is doing. That's collecting some form of information, sending it somewhere, and kind of giving us some form of feedback on that. In the consumer market, they're also working in consumer electronics. Then if we take a closer look at industrial smart cities, right now, the manufacturing market, we are getting smarter robots, and that's definitely all thanks to IoT. So, Nick, I know you own Qualcomm. Before we go any further, what is your kind of main bullish thesis on Qualcomm? Is it kind of the IoT market, or is it something else in general?
Well, the story for the last couple of years has been 5G. I think you're going to talk about that, right? That's like the main cause of this current slowdown that they're expecting. But I still think that's the main driver right now for the next couple of years. IoT, I think, is the next biggest driver. And that's going to be a nice tailwind for Qualcomm, I think, for like the next 5 years or so. And then automotive, which is like their smallest segment that they report, it's pretty tiny right now, and it's not going to do much to move the needle, but it is growing very fast. And by the end of this decade, I think that is a very large, very significant part of Qualcomm's business. So, I mean, it's going to be lumpy, right? But I think, in that order, that's how I'm thinking of Qualcomm, my bullish thesis for the stock, for the company. And really, it kind of goes in those three stages, I think, and lasts through the end of the 2020s.
Definitely, Nick. And I think you mentioned such a great point there where right now, Qualcomm is mainly known as that mobile company, right? And it's like, hey, if phone sales go down, it might be game over for this space. And I think that's what's happening a lot with, we're going to see with guidance in a bit. But then you mentioned a lot of their upcoming products, the automotive market. We see a lot of semiconductor companies do this. And right now, it's definitely a small play, but we're going to see in a bit huge design pipeline wins. Obviously, these design pipeline wins aren't guaranteed contracts, but it does kind of help us see the kind of market that there is out there and the kind of I guess, appetite for these semiconductor solutions in the automotive space. Make sure to click on the link below on the pinned comment so you can learn more about Nick. He definitely posts a lot of great information about the semiconductor space, so make sure to follow him there. So let me share screen one more time, Nick, and let's take a closer look at their earnings. All right, Nick, we're taking a quick look at the fourth quarter revenue, $11.4 billion this year, up 22% for quarter four. And correct me if I'm wrong, Nick, this one is pretty much organic growth. There hasn't really been too many big acquisitions that's driving this, right?
No, it is organic. So this is like, unlike what we talked about last week with AMD, huge boost they're getting from Xilinx. Qualcomm has like exploded the last couple of years because of 5G, and it's all organic.
And if we take a closer look, they kind of give us a breakdown of their revenue segments. We can see a good portion right now comes from the mobile market, $6.6 billion. Like we also mentioned, the automotive market is only $427 million. Their design, though, they have a win pipeline of roughly $30 billion. This is insane because I believe like 2 or 3 quarters ago, it was less than $16 billion. So it is growing dramatically. Again, we're seeing that appetite in the automotive market. But we're still seeing, even with those design win pipelines, it doesn't really correspond to the revenue the company is seeing. And finally, the IoT market is $1.9 billion. They have great partnerships with Meta Platforms, for example, on designing their virtual reality headsets. So that's a big win. That's a big product behind them. And Nick, one thing I'm not too sure if you saw, but I do believe the RF front end, this is no longer going to be an individual market for them. They're actually going to split it up between handsets and in IoTs and automotive in future segments. So next, they're only going to have 3 segments for them.
Right. Yeah. They did say that on the call. I did hear that, and I'm fine with that.
So just a quick look at their overall revenue per segments. We can see the handsets was up 49%, the RF front end was up 4%, the automotive segment was up 41%. On the yearly basis, we're taking a closer look at the fiscal year of 2022. The company just reported their fourth quarter. The Internet of Things was up 37%. And we can see this is becoming a huge player and is still growing at dramatic levels. And you might be like, Jose, this company is growing amazing, right, Nick? Everything looks good here. What's happening? Why did the stock price drop? And unfortunately, the company did give us a business outlook. And they said, given the uncertainty caused by the macroeconomic environment, they are updating their guidance for the calendar year of 2022. 3G, 4G, 5G handset volumes from a year-over-year mid-single digit percentage decline. So originally they were thinking it was going to be in the mid-single digits, maybe 6-7% decrease compared to a year ago. Now they're expecting a low double-digit percentage decline. So they're expecting probably somewhere between 11-12% decline in this market. And if we take a closer look, right, Nick, that handset, that mobile market is a good portion of this company's total revenue. It is true, this at the moment is still a mobile industry. It's still more of a phone company at the moment. There is that huge potential of it being more diversified in the future. But at the moment, investors should really care about this space. And when you see more from a single digit decline to a low double-digit percentage decline, it definitely impacts a lot the bottom line of the company's total revenue. It's going to impact, for example, their first quarter fiscal 2023 by approximately 80 cents on earnings per share. So Nick, any thoughts here? As Qualcomm investors, does this worry you with this kind of decline we are seeing in the mobile market, in the 5G market and whatnot?
It is worrisome, but management did give some pretty good clarity, I thought, on the earnings call about this. Their CFO, Akash Polkawala, said that they have basically about 2 months of excess inventory. So their customers are basically saying, hey, we're going to work with what we've got until we burn off some of this excess. And a lot of that just has to do with China, the lockdowns, the zero COVID policy. And it's kind of coinciding like right in time with a lot of supply chains opening up again in the chip industry. So it looks concerning, but management basically said they think that by the first or second quarter of calendar year 2023, So maybe 2 more quarters for Qualcomm. This excess inventory should be burned off. And then that mobile phone segment kind of returns to growth again. So this is kind of a similar dynamic, I think, that we're seeing with other chip companies, right? Like, I think we said last week, AMD said something similar with their consumer segment. It happens. Like, this is, a manufacturing industry. Ultimately, sometimes there's excess inventory that needs to get worked off, and you get these little short-term dips in certain segments.
Yeah, definitely, Nick. And we're going to mention later on how the China market right now is definitely hurting a bit, a nice amount. So it's definitely interesting that right here for Qualcomm, it's always that perfect storm, right, Nick? We're getting that perfect storm of everywhere globally. We're seeing that inventory correction, but then you're also seeing that kind of excessive weakness in the Chinese market right now. That's also kind of pushing this back. Again, like we've kind of talked about, I do agree with you that this is something investors should kind of understand and be familiarized. It's going to create, I want to say, more short-term volatility in the stock prices like we're seeing with AMD and stuff like this. But in the long term, right, Nick, does this change like any of your long-term thesis for a company like Qualcomm?
No, absolutely not. And especially, I would point out, Jose, you ran a similar show to this a while back. And we used to talk about, like, the chip industry may be entering this period of time where it's much less cyclical than it has been in the past. And I think that's true here. Like, Qualcomm's mobile phone segment is getting hit, but they actually still expect IoT and automotive to keep growing. That's not really like the old Qualcomm that would get hit with these wild cyclical swings. The business overall, I think, is more than fine. So I'm not worried. The stock, to me personally, looks really, really cheap.
Well, yeah, definitely, Nick, and I agree. Right, we've talked about that in the past, where the semiconductor has always been cyclical. We still believe it's still going to be cyclical, but not as crazy or as volatile as before, as a lot of these semiconductor companies continue to diversify into new spaces. We actually have some recent news that Qualcomm announced that they are building up some long-term debt, where now they're taking about $1.9 billion in debt, $700 million at a 5.4 rate, notes due in 2033. So far off into the future. The next is going to be a 1.2 billion at a 6% rate, and they're not going to be due till 2053. Again, very far off in the future. The company does mention, Nick, that they're going to use this cash to pay a lot of short-term debt. So for this year, for 2023, they actually have about a $500 million floating rate due this year, and they also have a roughly $1 billion fixed rate due this year. So what they want to do is use that money to pretty much pay those things off and then just take it as long-term debt. Also, the company, during their earnings call, they did mention that they are going to be proactively freezing hiring at the moment, and the CEO did mention that they are prepared to do more. Obviously, that means layoffs if things get worse. So after hearing them kind of doing freeze on hiring, maybe potential layoffs, any thoughts here on this kind of building up of long-term debt?
No, I think this was inevitable. Like you said, we saw on the quarterly earnings report that there were some short-term notes coming due. I think it just makes sense that the company just basically rolls that debt over into a longer-term note. If interest rates go down at some point, again, in the future, maybe they're able to refinance that at a lower rate. But, that's a problem with any company that has debt, but it's normal. So not a concern for me.
Definitely, Nick. So appreciate it. We're here done with Qualcomm. We're going to take a closer look at the next topic, SLAB.
I do want to thank the Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
Make sure to click on the link below on the pinned comment so you can learn more about Nick. He definitely posts a lot of great information about the semiconductor space, so make sure to follow him there. So for the second topic on today's episode, we are going to take a closer look at another IoT company. This is ticker SLAB. So Nick, can you tell us a little bit about SLAB?
Yeah, Silicon Labs. So maybe you heard of this company last last summer, Silicon Labs announced that they were divesting themselves of their infrastructure and automotive segment to another semiconductor company called Skyworks Solutions. That's the company that makes connectivity chips for the iPhone and other Apple products. The reason why Silicon Labs did this is all that's left over now from this business is IoT. Silicon Labs SLAB is a pure play IoT company, which is pretty cool. Like, that's pretty rare, right? Like, talking about Qualcomm, we still think of this as a smartphone business, but smartphones aren't really IoT. IoT refers to like other stuff that we traditionally wouldn't expect to have an internet connection embedded into it.
Curiosity, what got you interested of this? Was it originally just that IoT play?
Yeah, you know, what I think initially attracted me to it was not necessarily the IoT pure play, because I've invested in some IoT pure play stocks in the past that didn't work out so well. It's a difficult business model because, like you mentioned earlier, these chips are ultra cheap. Like, that's the reason why IoT works in the first place, right? A manufacturer doesn't want to mess around with this stuff. If they have to put a big, giant, expensive chip in it, it hurts their profit margins. So IoT needs to be cheap and inexpensive, which means it's a really, really difficult market for a semiconductor business. But here's where I think Silicon Labs really stands out as a pure play. You can see the slide from their presentation. They don't just design the chip. They're a fabless company. So they design the chips, and other companies handle the actual manufacturing for them. So they do the design, but they also develop applications. So they kind of help their customers, their manufacturing partners, build the actual application for the IoT device, which is a huge differentiator. And then they build ecosystems as well. So you end up with, like, you know, an IoT device at home, right, Jose? Like, you might start with like an Alexa device, but then like you also hook up your TV to it as well, and you say like, hey Alexa, turn on the television. Alexa, play music, and then maybe you have a smart speaker connected to that. So that's like the ecosystem that SLAB helps develop for their customers. And you can see some of the names on their list of their customers. Pretty impressive customer list, right?
It's so weird. Obviously, it's pretty cool to see Amazon, Ring, and all these big players out there. What really got me interested is when I was looking at their channel partners. When I used to be more in the traditional workforce, I did a lot of kind of chip design, and I would always purchase from these giants right here where they have as channel partners, Mouser, DigiKey, and Arrow. So it's pretty cool to see their products in that space, because those get a lot of traction, especially in the manufacturing space. So I was pretty interested to see they do have that channel partnerships with those big players there.
So they get a lot of exposure to numerous markets, different markets. It's not just a smart home business. And we can talk about that here in a moment too. You also see in this slide too the different protocols they work with. So like Bluetooth, Wi-Fi, all sorts of different wireless technology that a company might want to embed in their device. You name it, SLAB probably has a solution. So that's notable as well.
I do want to thank the Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
Make sure to click on the link below on the pinned comment so you can learn more about Nick. He definitely posts a lot of great information about the semiconductor space, so make sure to follow him there.
This is also interesting to me as well. They have hundreds of customers. This is another issue with like some small IoT stocks that I've messed around with in the past, is like they have really, really big customer concentration. That's not necessarily the case here with Silicon Labs. So like you do see this big giant blue wedge here. You know, that's their top 5 customers, but no single one is that big. And then you have all these, you know, hundreds and hundreds of other smaller companies as well. So it kind of gives them nice exposure to a lot of different customers playing in a lot of different markets. And who knows when one of these really, really tiny little businesses maybe comes out with some killer product, some killer app, and then Silicon Labs gets to enjoy the growth along with that small customer as well. So I like this diversification here.
I like that a lot because, like you mentioned, like Skyworks, for example, is a perfect example. A huge portion of that company's total revenue comes from Apple itself. So here, largest customer is no more than 5%. Pretty interesting. And like you mentioned, if one of them does create some killer product, the overall revenue here can grow. They have so many, I want to say, the probability of one of these products maybe becoming a huge long-term winner increases because they have all these kind of customers with them. And I was seeing it was a market cap of roughly like $4.5 billion at the moment. So definitely a small play, but definitely pretty diversified. You normally see a company like this having just being driven by only one customer, and that's the exciting point. But here, the exciting point is it has multiple customers within its space.
Yeah, absolutely. That's a really great point. Because this is, I mean, I consider this basically a small cap. It is a little over 4 billion, but you know, I don't know, the old small cap definition cuts off at 2 billion. SLAB is tiny. So it's a great business with a lot of potential upside. And I'll share my screen here one more time to just go over quickly some of the other items that they help with manufacturing. So home and life is one segment. So again, all of those smart home devices, everything from a smart speaker to, you know, an appliance that maybe has some connectivity, but life, they also do a lot of healthcare, medical care products that have some sort of connectivity chip in it as well. So next time you go to the doctor, maybe keep an eye out for like some devices that might be hooked up to a network, might be a SLAB chip in there. And then their other segment, industrial and commercial. And I mentioned earlier, this is where I think there can be a lot of impact in the world with IoT. Some of the things that they designed for renewables and electric vehicles. So all of these things, so like renewable energy, maybe you have a battery pack hooked up to like, let's say a solar panel. There's sensors on those things. It's going to help sense and send data about the amount of energy being collected, the amount of energy being stored when maintenance needs to happen. And it's going to send that data automatically via a wireless connection into the cloud. And then like an AI algorithm might be able to analyze it. SLAB is involved with that. Smart lighting, shelf labels, a lot of industrial companies using stuff like this to get more efficient. Asset tracking, predictive maintenance. So we'll hear a lot of things about smart cities anymore. All of this stuff helps businesses get more efficient and also helps cities manage their infrastructure, manage things like the flow of traffic, help reduce energy costs. SLAB basically has its hands in a lot of different areas, all by virtue of the fact that they have like that full stack, right? Everything from the chip design all the way to application and ecosystem management. It's a really unique business.
Definitely, and like you mentioned, it's more of a fabless business, so it has a little bit less risk on its side as well. And when I think about, sometimes I feel, Nick, when we think about smart cities, we think of some crazy high-tech city, right? But just even the addition of some of these sensors on the traffic lights itself is a great example of some of the new kind of Internet of Things solutions just being implemented on products. And that's something that we can see grow dramatically just here in the United States. I know where I'm from, not every streetlight has a sensor yet to kind of help with the flow of traffic, and something like that, in my opinion, could be a kind of a nice tailwind for this kind of smart city market. So I know sometimes when we think of a lot of these smart cities, smart cars, or just when we add the smart, we think of some crazy revolutionary technology, but sometimes it could be as simple as that. So Nick, I a lot of great points there. Just definitely a small company for right now. Any kind of risk that maybe we should kind of be familiarized with this company at the moment, or something that you might not like?
Yeah, let me share my screen here. Just so I'm sharing my screen here on my ticker terminal. And I just want to point this out here. So right here, this column is the 2022 expected revenue, just over 1 billion, which represents 42% year-over-year growth. You see the drop off last year. That's because they sold a big chunk of their business to Skyworks Solutions. But then you see the 2023 number drop down to just 6% estimate at this point. And as a result of that, just scrolling down here, we see a drop, an expected drop in earnings per share. Also a decline, I should say, in free cash flow as well next year. I think that's the biggest risk facing Silicon Labs at the moment, just like other chip companies. You saw on the slide earlier, roughly half of their business is tied to consumer markets. And there's excess inventory right now after 2 years of like rapid, work from home purchasing among consumers. Suddenly that's coming to an end just in time for supply chains to loosen up. So Silicon Labs is expecting maybe a 2 or 3 quarter burn off of excess inventory. And so I think that's what's hurting the stock. Shares are down like 40% this year. So there's some cyclicality to be aware of with the business.
Definitely. And just a final question, Nick, before we end here. I don't know if you mentioned, is this a stock you own or you don't? You mentioned you don't, but this is one that we can see, very small market cap. Definitely a nice growth stock. It definitely has numerous tailwinds that it can go. I'm gonna say for both of us, this is a play that if one gets into, it's not gonna be a huge position in a portfolio. It's something that is gonna be a nice small play because of that opportunity that it can grow dramatically. But at the same time, there is that numerous risk that can definitely affect it. Would these be your thoughts as well, Nick, for a company like this?
Yeah, absolutely. It's something that I plan on nibbling on. Like I'll start picking up a few shares here or there. I would say maybe early 2023. And I'm not going to take a huge position because it's a small business. When I start entering the stock, I keep it under 1% of my portfolio. And if it wants to be more than that, it's going to have to earn it first.
Definitely, Nick. That's a great rule there. All right, Nick, so thanks for the topic. Now we'll move on to topic number 3. So now for topic number 3 in today's episode, we are going to take a closer look at the Chinese market. We are seeing a lot of talks about USA regulations affecting a lot of companies there. And it's pretty interesting. Recently, we've heard reports that certain tech giants are kind of tweaking their products so they're going to be able to bypass these regulations. But before we take a closer look at that, I know Nick wants to do a little bit more of a higher level of what the Chinese market or the overall China market means for the semiconductor industry. So Nick, I'll pass it along to you.
Yeah, it's a huge deal, right? So we just talked about Qualcomm, Silicon Labs, both declining revenue here headed into the next couple of quarters. Let me just share my screen here.
I do want to thank the Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
Make sure to click on the link below on the pinned comment so you can learn more about Nick. He definitely posts a lot of great information about the semiconductor space, so make sure to follow him there.
So this is a monthly report put out by the Semiconductor Industry Association, which represents virtually all semiconductor businesses. SIA. You can find it if you go to semiconductors.org and then go to their news section. But this is the September global sales report. They have this nice little chart here that shows the red line, the year-over-year growth for the industry over the last few decades. And you see this big drop, and it turns negative here at the very tail end. The blue line is actual global semiconductor revenue, so it's still close to all-time highs. But this drop, and the reason for it looks concerning, but if you look a little bit closer, it's being completely driven by China and the greater Asia-Pacific region, but specifically China. Take a look at this here. So their year-to-year sales increased in Europe, North and South America, and Japan, but decreased in Asia Pacific and other by 7.7%, and China by 14.4%. Because that's such a big market, it's sort of dragging the whole industry sales report down, even though things are still looking really strong here in the US, in North America, and in Europe. So I think that's just kind of a helpful backdrop to everything that you're about to talk about, Jose.
Yeah, definitely, Nick. And I mean, it's pretty impressive how, right, for September, I don't know if impressive is the right word, but how September is down roughly 0.5%. What was it? 0.5% year to year. United States was up double digits, I think I saw, right? And China alone was down mid-single digits. And just that mid-single digit strength was enough to make this a year-to-year drop. So it just shows the overall strength and the overall power that the Chinese market has in the in the semiconductor industry. We're also hearing a lot about regulations right here, Nick. And we have been listening to these earnings call, and a lot of the questions analysts have been asking the companies is, hey, how are these regulations impacting your industry, and is this something that we should be worried about? I know earlier in September we saw that, hey, Nvidia is going to be unable to send out some of their chips because these regulations are mainly powered for chips that are used in high performance computing, things for data centers, for artificial intelligence, machine learnings that can help in forms of military cases, right? So it's pretty much a national security risk is what the United States is saying. So Nvidia, because a lot of their products are meant to be used in machine learning, artificial intelligence, a lot of their chips are exceeding that threshold of where they can be sent. So let me just share my screen really quick here, Nick, so we can see what's happening right now. We can see reports. There are numerous reports that have appeared yesterday that Nvidia has created new chips to address United States export rules to China. And overall, that obviously should help the overall risk of sales decrease. So Nvidia is creating the A800, which is a new version of the A100, but slower. So this is going to help kind of Nvidia pass and kind of sell more products to China. I do want to say something like this kind of worries me sometimes, Nick. I'm not saying I believe the company is going to be doing anything sketchy, but historically we saw that kind of huge crypto market, and the GPU products were big for cryptocurrency mining. And one thing that Nvidia did was, hey, we're going to create our products where they aren't efficient for the crypto market. So this is gonna deter miners from purchasing our product, and it's gonna go more into our traditional gamers, into our traditional consumer market. That was true, but the tweaks that they made were very small. It was something that maybe not your traditional user could do, but someone who was tech savvy enough could just kind of shift the BIOS on these GPUs, and that kind of strength in the crypto market regained after you made those kind of updates. I'm not saying Nvidia is going to do this, but I believe there's always that added risk. And I'm worried that, Nick, that, hey, maybe Nvidia might be doing something similar here where it might just be they're slowing it down at the moment, but in future, but maybe the consumer later on can just do a few tweaks themselves to kind of bring it back to that super strength. And I'm fearful that might cause some form of more repercussions for the overall business. Am I overthinking? Is this me putting my conspiracy hat on here, Nick? Or again, not a big fear, but just at least a small added risk from those thoughts. Any thoughts from you?
Yeah, I'm sure the U.S. government is going to be asking a similar question when they grant, or maybe if they don't grant, the sale of this new A800 chip and the systems, the data center systems they'll go in before they get shipped to customers in China and Hong Kong. So I think it's definitely a concern. I think the good news for NVIDIA specifically, they did say it would be like up to a $400 million impact on their quarter, which is about 10-15% of their data center revenue. It's significant, but even if they missed out on all 400 million of those sales, like the A800 doesn't go through and they miss out on all 400 million of those sales, it wouldn't be completely devastating because Nvidia is still double the size it was in 2019 as far as revenue goes. So, I mean, that's how I'm looking at it.
Another thing, Nick, and this is real-time thoughts that I just kind of have right now. A great thing here is sometimes some of the chips that they make might not hit the yield we create a chip, it's supposed to hit, let's say, it's like creating a car. The engine is supposed to hit 100 miles per hour, right? But this car that somehow, it might have got messed up during the yield, only hits 80 miles per hour. So I think this is actually now a smart move here because it kind of helps them hit those chips that might have not met the requirement and actually give them a purpose and kind of maybe they don't lose too much on inventory, especially right now with that inventory correction. So I think that's actually a pretty cool move. Again, just kind of thinking from the top of my head there.
Maybe we should try to get like a plant manager from TSMC on here and be like, hey, what are you doing with those defective chips? Are they going into the A800?
Definitely, Nick. Kind of talking a little bit more about the GPU market. I want to say these U.S. regulations are definitely impacting a lot of companies globally. There is a company known as Biren, B-I-R-E-N, and this is kind of known as the Nvidia of China. They are they are actually the largest GPU developer. And unfortunately, they did have to slash headcount due to U.S. sanctions because TSMC, we all know the huge manufacturing giant, was unable to, because of the regulations, and obviously they want to, United States and Nvidia, companies like AMD and a lot of semiconductors in the United States are a huge customer of them. So I'm pretty sure TSMC doesn't want to get anybody upset, especially their big players. So they actually were halting some of the productions of Biren, the Chinese GPU product, because it was exceeding that kind of sanctions that the United States had made. So very similar to Nvidia, though. Biren is also going to be slowing down their products so they can kind of bypass these regulations. So it's something we're seeing across the map right now. Nick, and again, I don't know, when I first started to think about these regulations, I didn't think of this as a solution, but now that we see it firsthand, in my opinion, it makes perfect sense. Hey, we just can't send super fast chips, we'll just send medium fast chips across the world. And and at the end of the day, I think United States, the government just wants to make sure that, hey, we probably have the top products, so it's okay if we send out the second-rate products somewhere else. So I believe maybe this can kind of help ease some of the tensions we're seeing with the semiconductor market and China at the moment. Finally, I do want to say, I want to kind of show this transcript from ASML, Nick. One of the questions was, hey, what's the impact on ASML here due to United States regulations? ASML pretty much said, hey, first, we're a European company. Most of our technology comes from Europe. Not too much comes from the United States. So it is very limited to their exposure of revenue. But they do say if somehow they're unable to send certain tools to customers in China, the demand outside of China is still such that they would get compensated for that in the current environment. So that just overall, Nick, shows the strength we're seeing here in the semiconductor industry. We're seeing kind of this manufacturing growth, not just in the APAC region, right? We have the CHIPS Act here in the United States, and we also have very similar CHIPS Act in Europe. I believe one is happening as well. And I've even read reports where even India itself is also trying to kind of build up the semiconductor industry as well. So Nick, we're seeing a lot of talks here about these Chinese regulations, the United States regulations, how it's impacting a lot of semiconductor companies. I know here, being a semiconductor investor, how are you kind of working through this? Are you kind of, is there any kind of new plans you're doing when investing in semiconductor companies? Is there something new you're watching for? This is a new added risk. At the moment, there's certain companies that it's not a huge risk. Other companies, it might be a little bit more impactful. So how are you controlling this risk with the United States regulations? Obviously, we have certain rules right now, but there's always these rules can kind of increase over time. So how are you managing this added risk in the semiconductor industry, Nick?
Yeah, it's a real challenge because, like you said, new rules might get added at some point in the future. That's my biggest worry here. Because we've been here before. Like 2018, 2019 is when like the U.S.-China trade war first started, and there was a big round of tariffs and restrictions on chip sales. So that's the good news. Like the industry now has worked through this a couple of times. There could be more risk of this happening down the road, but this is in general how I manage the risk, knowing that chip stocks, the actual stock price can be far more cyclical than the industry itself is. Like the stock price will fluctuate even if revenue doesn't actually drop. The stock price might still drop anyways. So when that happens, like I buy more. And then as the stock price rallies, I buy less of my favorite chip stocks. But I'm a net saver though. So like if someone's listening and they're like, well, that sounds great, but I'm not a net saver. I'm not adding to my investment accounts. You might just execute some sort of plan where as chip stocks increase in value, maybe you trim some of the profit and invest it somewhere else. And then when the cyclical downturns hit, maybe you peel off some profits from maybe your software companies or something and reinvest back into chips when they're down 50% or something ridiculous like they are this year or like they were in 2018, 2019.
Definitely, Nick. Thank you for that. And I do believe, like you mentioned, right, one of the fears is these added rules. Sometimes I wonder, hey, when is AMD and they're kind of I think we might have heard reports that some of their CPUs might eventually start to get hit with some of these regulations, especially those that deal with AI and machine learning. So definitely interesting. Very similar to you, I am a net saver. So I want to say, me personally, I didn't purchase too many semiconductor stocks in 2021. But now, when we are seeing a lot of these prices, even though we have numerous tailwinds in this space, headwinds in this space, I believe there's a lot of tailwinds. So I do enjoy purchasing sometimes individual stocks, sometimes even just via ETF. Because I do believe just the semiconductor market as a whole will be a market-beating industry for the next few years. And so for me, sometimes even just going with the ETF route, a little bit less riskier sometimes, and you still kind of get the overall gain, the overall kind of normalized gains within this industry. All right, Nick, so that kind of ends with topic 3, and we have one more topic before we end the show, so let's take a closer look at that. All right, so for the final topic today, we're going to take a closer look at GlobalFoundries. This is a company that deals with the manufacturing side of the semiconductor industry, and they just reported earnings. So Nick, one thing I want to say that's pretty interesting about GlobalFoundries is year to date, right? The stock is only down roughly 10%. I think we've seen a lot of semiconductor companies, even TSM that deals in the similar market, down a lot more than this. So this is pretty interesting. They are a recent IPO. The company came out in, I believe, October of 2021, so a little bit over a year ago.
I do want to thank the Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
Make sure to click on the link below on the pinned comment so you can learn more about Nick. He definitely posts a lot of great information about the semiconductor space, so make sure to follow him there. So the great thing about this company, Nick, is they don't really do much of the advanced chips. They really focus on more traditional, I want to say old style chips. The great thing about old style chips is they're always being used, they continue to be used, and the technology within itself can continue to be kind of improved. So even though it's old chip, it's not like it's just the same technology. Sometimes there are ways that you can improve the yields, add new solutions to them, improve the overall speed without reducing the chip size. So that's kind of the market they hit. So even though they hit the semiconductor manufacturing side, they're not really competitors to the top players like TSM, like Samsung, or like eventually Intel if it hits this market. A few key points from their quarter 3 results, Nick. First, we can see revenue was up 22% year over year. A nice growth there. But if we take a closer look at wafer shipments, it was only up 5%. So first it's telling me that, hey, yes, they are selling more chips right now, but it seems like the average selling price of their chips are getting stronger. So even though chip shipments is only up 5%, that revenue grew a nice amount. The other thing that I think is super impressive, Nick, is their adjusted EBITDA margins grew dramatically, right? 29.7% last year versus 38.2% this quarter. The main reason for something like this happening, Nick, is just in the manufacturing side. In the manufacturing side, right? Your margins improve as you start to use more of that supply chain line, right? Because creating more products, you already have that production line. So creating more products doesn't cost too much more money. All that money was already invested in the equipment itself. So when you start increasing your production capacity in that same line, usually your margins increase a nice amount. Here, if we take a closer look at their kind of quarterly revenue trend, we can see a nice growth quarter over quarter, but we are seeing a bit of a slowdown right now. The company does mention that, hey, they are seeing a bit of a weakness in some of their orders right now, and some of their customers are kind of saying, hey, can we push back some of our orders at a later time? The great thing is this is kind of allowing GlobalFoundries to kind of bring, hey, yes, we can kind of do this if you kind of enter into more of a long-term agreement for some of these purchases. So GlobalFoundries is definitely kind of using this opportunity where, hey, they might maybe not see much growth quarter over quarter, but they are trying to add those long-term agreements where they have more of a foreseeable revenue growth in the upcoming years. So here we can see, Nick, a little bit about the revenue end market. And this one was pretty interesting. Right now we can see a majority of the revenue comes from the smart mobile devices. And they actually mentioned this a lot before, Nick, that when you kind of think about the mobile devices, you think of your consumer mobile phones. But during their previous earnings call, they mentioned that, hey, our products, our smart mobile devices don't really hit too much of the low-end consumer products. So we don't see too much of that volatility that some other semiconductor companies might see in the consumer space. And we're actually, that seems to be true because, look, Nick, year to year, year over year, it's actually up 12% on the mobile business, and it's only down 2% quarter over quarter. So I know a lot of investors might have been worried that, hey, this was too much in the consumer space, but they previously kind of halted the fears. And I do believe these numbers kind of show us that was true, that, hey, the consumer market doesn't have too much of an impact on their play, at least at the moment. Their second largest market is the communication, infrastructure, and data centers. That was up 29% year over year, 8% quarter over quarter. Home and industrial Internet of IoTs was up 83% year over year, 15% quarter over quarter. The automotive market, unfortunately for them, Nick, this one to me was pretty interesting, was down 8% year over year, but was up 16% quarter over quarter. Their biggest and more dependent consumer is the personal computing, but we can see this is the smallest revenue segment for them. That, unfortunately, was down 58% year over year, and that's really kind of following suit with what we're seeing in the consumer market. But we can see this is a company that's not that heavily dependent in the consumer space, even though we see the mobile devices being such a big play. Any thoughts here, Nick, on their kind of key and end markets that you might kind of find interesting?
Yeah, a question, I guess, for you, Jose, because like what's really concerned me with GlobalFoundries is their decision to, like you mentioned at the outset, not pay much attention to like the leading node manufacturing, like your most advanced chips for AI and high-end computing, but instead focus on like the lagging node manufacturing processes. And right now, based on what I've heard on earnings calls, is like those lagging nodes, like they're still under investment. There's still lots of supply chain issues. And I worry that maybe that lack of supply is what's keeping revenue rising at a north of 20% rate for GlobalFoundries. Are you a little bit worried about the valuation of the stock and like the outperformance against the market? Because like this should be a lagging node manufacturer, like this should be like a pretty slow growth type of business, not a 20% plus growing business. Does it worry you that maybe like this one's ready to like fall off a cliff?
Definitely some risk there, Nick, especially in the lagging side. I do want to say some of the tailwinds affecting this, really impacting this company is, I want to say, the CHIPS Act. A lot of this production for this company is made here in the United States. Because of that, it also opens them up to a lot of kind of government contracts and products like that. So it makes them one of the lead players in the aerospace and the defense market, which has a nice amount of tailwinds. So I do believe right now. There's definitely that slowdown. I do believe that lag might be coming a little bit slower, like you mentioned, in the kind of lagging nodes. And I do believe the company sees that, and that's why they're trying to kind of get in line and kind of jump. Hey, you want to see less products next quarter? Sure, but maybe start signing this long-term agreement. This long-term agreement contract that you're going to purchase throughout the next year to kind of fix that. The other thing is this is a company, Nick, that they deal a lot with optical products in their chips. They are kind of the leaders in that space, and I do see optics being a huge growth. Again, mainly I've seen it in the emerging markets, more in the aerospace and defense from prior work experience. I've seen that use of optical chips. So I definitely see that solution there. For me, one of my favorite plays for GlobalFoundries is that, hey, this is more of an American company. It opens up to that huge wallet the United States government has, especially in the defense. But like you mentioned, sometimes that lagging node might seem like it's still doing great right now, but it's just sometimes lagging a bit, where that revenue decline can kind of hit a little bit later down in the cycle. So yeah, definitely a risk there. This is one of those plays where if I was to choose between TSM and GlobalFoundries, I think I would prefer TSM as a bigger position, but GlobalFoundries I wouldn't mind it in my portfolio, maybe at a smaller position though, because obviously it's definitely not the leader.
Yeah, despite my worries about this company, they've proven me wrong after a whole year after their IPO. They're doing a good job, and I think you made a really good point there too about the U.S. CHIPS Act. GlobalFoundries is definitely going to get a piece of that pie, and probably a nice long-term catalyst for this business.
Definitely, Nick. So that comes to the end of the show. I want to thank everybody for watching. Make sure to hit that subscribe button if you enjoyed episode 2. Remember, make sure to check out episode 1 where we talk a lot about AMD, Intel, the data center market, and so much more. Again, if you want to learn more about Nick, he has a great YouTube channel. The link is on the description, so make sure to check it out. Take care, have a good time, and see you all next week for episode 3.